Hello and welcome. Today, we're going to dissect a really specific and often misunderstood piece of Canada's retirement income system. We're talking about the Old Age Security Recovery Tax, though you probably know it by its much more common nickname, the clawback.
Now, Old Age Security, or OAS, is one of the cornerstones of retirement in Canada. It's designed to be a universal benefit for seniors. But, and this is a big but, there's a special tax rule that creates a major exception to that whole universal idea. And that's exactly what we're going to unpack, what this clawback really means, especially for retirees with higher incomes. All right, so first things first, we need to lay some groundwork. We'll look at the basic principle of old age security, and then explore the central problem that the recovery tax tries to solve. Okay, so the single most important word here is universal. You see, unlike something like the Canada Pension Plan, your OAS isn't based on what you did for a living or how much you paid into a system. It's a foundational social safety net, paid for from general government revenues, that's meant to provide a basic income floor for all eligible seniors. And that right there, that is the million-dollar question. While pretty much everyone who meets the residency rules is entitled to get the OAS payment, the tax system asks a different question. Should people with very high incomes get to keep the full amount? And that question leads us straight to the recovery tax. So here's the government's solution. They've created this special tool that zeroes in on OAS recipients once their income crosses a certain line. It's really important to understand this isn't just more income tax. Nope, it's a completely separate additional tax whose only job is to recover those OAS payments. So you can see how it directly challenges that idea of a purely universal benefit. You know, the term clawback is informal, but it's brilliant because it tells you exactly what's happening. The government is literally clawing back the benefit that it paid out, taking it back from higher income individuals. It's a very vivid and very accurate description. Okay, so we've got the principle down. Now let's get into the nitty-gritty. In this section, we're going to look at the actual numbers and the step-by-step math behind how the government calculates just how much of your OAS gets clawed back. And to make sure we're being perfectly precise, we're going straight to the source material. This is the official wording that defines the tax, and it gives us the exact example we're about to walk through. When it comes to tax, getting the details right from the primary source is absolutely critical. All right, this is the first number you need to burn into your memory. For the 2025 tax year, this is the magic number. If your net income is below this, you're fine, no clawback. But the moment you earn even $1 over it, the recovery tax gets triggered. And just so we're clear, net income specifically means the amount on line 23600 of your T1 tax return. That's the number the CRA looks at. And here's the second key number, 15%. Now, this is crucial. It's not 15% of your total income, not at all. It's a 15% tax that applies only to the dollars you earn above that threshold we just talked about. A simple way to think of it is this. For every dollar you earn over the limit, you owe 15 cents in recovery tax. You know, the calculation itself is surprisingly simple. It's really just a three-step process. First, you figure out how much your income is over the threshold. That's your excess income. Second, you hit that excess amount with a 15% rate. And third, voila, that final number is what you owe in OASR recovery tax.
Let's put it into practice with our example. So, imagine someone has a net income of $98,500. We start by subtracting the 2025 threshold. That's $93,454. That leaves us with an excess income of $5,046. Then, we just multiply that by 15%, and we get our final answer, a recovery tax of $757. See? Pretty straightforward when you break it down.
Now, this is a really important detail that's easy to miss. You might think, wait, my OAS is already taxable, and now you're taxing me again? It could feel like double taxation. But to prevent that, the system lets you deduct the recovery tax you pay from your income. So what's really happening is this special 15% tax replaces your regular income tax on that chunk of income. So this leads to a pretty logical question, right? Does this clawback just keep going up and up forever? Well, no, it doesn't. And in this next section, we'll look at the exact point where the entire OAS benefit is paid back. Thankfully, the system has a built-in ceiling. You can never, ever be forced to pay more in recovery tax than the total OAS you actually receive that year. The goal here isn't to be a penalty. It's simply to have you repay the benefit you received. That's it. So, there is an upper limit, a finish line for the clawback. For 2025, that line is at an income of around $151,668. Once your net income hits that point, the math works out so that your recovery tax equals your entire OAS for the year. In other words, you have to give it all back, leaving you with a net OAS benefit of zero.
This really gives you the complete picture. You can think of this as the clawback zone. It all starts once your income creeps over that lower number, and the repayment amount grows steadily as your income rises. It continues until you hit the upper threshold, and at that point, the entire benefit has been returned to sender, so to speak.
Okay, let's bring it all home. We'll do a quick summary of the key rules and then take a step back to think about what a tax like this really means for retirement policy in Canada.
So, to recap, if you remember nothing else, remember these 4 things. The clawback starts at a net income of $93,454. The tax rate is a flat 15% on any income you earn above that line. You pay back the entire benefit once your income hits about $151,668. And, crucially, the tax you pay is deductible.
You know, when you boil it all down, the OAS recovery tax is really a fascinating policy tool. It's trying to balance 2 very different ideas. On one hand, you have the social goal of a universal benefit for all seniors. On the other, you have the financial goal of a progressive tax system where people with higher incomes contribute more. For anyone in that clawback zone, OAS is no longer universal. It has effectively become an income-tested benefit.
And that leaves us with a pretty big question to think about. The clawback really highlights this natural tension between social policy and tax policy. It forces us to ask what universal truly means inside a tax system that's designed to be progressive. It's a fantastic real-world example of how governments try to design programs that are both broad and fair, but also fiscally sustainable.